Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zach's Top Stock Picks. I am Brian Bolin. I'm the aggressive growth stock strategist here, and I've got a top stock pick for you, or what we'd like to call a top stock pick. Either way, it's a great one. Company has earnings this week, so you don't have a lot of time to do a lot of thinking about this stock, but I like what I see out of it. So let's go right into it. What is it? It's Virtu Financial. Virtu Financial, there's the ticker symbol right up there. VIRT is the ticker, and it has a Zacks rank #1. That's a strong buy. So obviously estimates are moving higher. A great valuation here. B for value, D for growth. Not something that I would highlight on my normal aggressive growth rank buy videos, but we can see here from our Zacks page, it's going to report before the open. The BMO is before market open on the 29th. Today is the 27th of January, almost done with January, and earnings season is really kicking in here. You can see the stock popped up in November and then caught in a trading range, but prior to the report here, the stock has started to move higher, and an indication that investors are liking this. So what does Virtu do? Virtu is a high-frequency trading fund. So HFT, as we would call it, they talk about delivering liquidity to global markets. It's just more about the speed of their trading ability, and that's because they have a lot of cutting-edge technology to power that. So they're making lots of trades. They're in there. So when there's high volatility in the market, a company like Virtu Financial is going to be more likely to be more profitable than less profitable. Let's go ahead and take a look at the numbers that we love to look at when I'm doing a ranked buy video. Are you beating the number? Well, they missed. They had some pretty big expectations there. So they missed, but they have followed that miss up nicely with 3 straight beats, and that 42 pops up to 76, and then 83 kick back to 82. We'll see though how this last quarter played out for them pretty soon. What are the estimates doing? We see 60 days ago this quarter was going to be 78 cents. Now we're up to 84 cents. Next quarter, hard to make a model on a stock like this when you don't know what volatility is really going to be. But 85 to 86 cents, and that's helped the full year number go from 315 to 326. And this year, it's next year, but it's this year since we're already in January. 307 up to 323. Again, very hard to model those estimates out there for those analysts that cover it. So what have you done for me lately? Well, this year, 1.5 billion in sales. That's good for 26% growth. And boy, they're expecting a flat year. I can't imagine that being the case. The computers are doing a lot. There's a lot of volatility out there. So I don't like to, just 1 month in, we're kind of doing ups and downs. But here is the story here for this stock. It's the valuation. 12 times forward earnings. Price to book is 4.3. This is an asset slim business. Not a lot of, yes, there's a lot of computing power there, but it's not like they're building equipment and need inventory and that sort of thing. So price to sales at 2.4 times. We had 12% top line growth most recent quarter, and our margins are low in the low teens here, 12, 13. We'll see how it comes out next quarter. But again, 12 times earnings. Seems pretty good. So what has been going on with this stock? Bush, we're out of the time when we would look at the pandemic. We're already back to, hey, everyone's going to live and we're going to be okay. Tons of stimulus. Then the tech wreck of 22 caused this stock to fumble around, hanging down in the low teens. And all of a sudden, things are picking up. This market is moving forward. It's moving up. And we can see that the stock has gotten well ahead of where the estimates are. But at the same time, at trading at only 12 times forward earnings, I'd have to believe that this is something that's definitely worth your radar. I think that the company is going to probably post a beat because we did see a good amount of volatility. And volatility that could be picked up easily by the computers. Obviously, we had the election in November, surprise outcome to some. The stock market initial move higher, then a drastic move lower in December. I would think that Virtu is able to make profitable trades around that. All right, so that is my top stock pick for the week. Let me hand this off now to the guy with the best email at Zacks. His name is Ben Rains. You can email him at brains@zacks.com. All right, take it away, Ben.
Thanks, Brian. Ben Rains here for Top Stock Picks. Today I'm looking at DaVita, which trades in the ticker DVA. DaVita is one of the top providers of dialysis services in the U.S. The firm aims to serve patients suffering from chronic kidney disease and beyond. It serves roughly 250,000 patients at over 3,000 outpatient dialysis centers. A bulk of those centers are in the United States, with several hundred spread across 11 other countries. Roughly 15% of the U.S. population are estimated to have chronic kidney disease, and this is according to the CDC. Diabetes and high blood pressure are two of the leading causes of kidney failure, and over 1 in 10 American adults have diabetes, with 1 in 3 having pre-diabetes, according to the CDC. Diabetes rates are also skyrocketing beyond the U.S., so DaVita is expanding its reach both within the U.S. and outside. It's also set to benefit from an aging population in the U.S. and globally, and it's outpaced its industry and the S&P 500 over both the last 5 years and the past 20 years, yet its valuation is pretty solid. So now we're going to dive into some more of its estimates and some other fundamentals on DaVita. All right, so we are on the Zacks.com ticker page for DaVita, and we can see that it's a Zacks rank #1 strong buy right here. And as I alluded to, it has an A grade for value and a B grade for growth, which is a great sign. And then its industry is in the top 34% of 250 Zacks industries, which is always a good sign as well. So we're going to go to our detailed estimate page first to take a look at what to expect from DaVita this year and next. So we're calling for about 5.5% revenue growth this year and another 4% growth next year. And then the bottom line is, this is where it's really impressive. So we're calling for about 15% adjusted earnings growth this year, and then another 16% next year, which is a really impressive sign as well. And we're quickly to go take a look at this chart, and we can see that its earnings estimates for 2024, 2025, and 2026 have gone up significantly over the last year, stagnated a little bit recently, but that overall upward revisions is why it has that Zacks rank #1 strong buy. Now we're going to take a look at our ZRS system to take a look at its performance. So this is over the last 10 years. We can see that it's up roughly 132%, which blows away that Zacks medical sector, which is up just 5%. And if we go over the last 3 years, we can see just its more recent performance up about 60% over the last 3 years, with a big run over the last year, up 60% over the last just 12 months. But then we'll kick it back over the last 25 years, and we'll go to, say, just against the S&P 500. So we can see it's up a huge amount, over 11,000% for DaVita compared to the S&P 500, which is up about 400%. And if we go over the last 20 years, we can see it's up about 730%, which easily outpaces the S&P 500, which is up around 445%. And if we go to its industry, it shows that its medical outpatient healthcare market, which is what DaVita is a part of, is up just 24% over the last 20 years. So this puts then its valuation in context with those performances. So we'll go to forward 12-month earnings, and we could see that it's trading at a solid discount compared to its industry, even though it's crushed its industry over the last 12 years. So it's trading at just 14.9 times forward 12-month earnings. Over the last 20 years, it's traded as high as 23 times forward 12-month earnings. So it's trading roughly almost directly in line with its 20-year median, even though it's trading near all-time highs. So its valuation is really solid. We can just show this over the last several years as well, just to give a better sense of where it is. And we'll close out then this by looking at some technical charts here as well. So if we go here, we can see this is a candlestick view. So we can go to a line that's maybe a little easier for some people to view. So this is over the last 10 years. It found support several times at the 50-week moving average. So we'll go to, let's go to a 2-year chart here. We can see that it just broke out all-time highs after finding support. This red line is the 200-day moving average several times recently. So it's breaking out to new all-time highs, which is a great sign, even though its valuation is still really impressive as well. So it's worth stressing once again that DaVita is expanding both in the United States and outside of the US. It is expected to benefit from an aging population, and we have to remember that diabetes rates are skyrocketing, which often leads to kidney failure. So that does it for me and this episode of Top Stock Picks. Please head over to our Zacks.com/promo page for a look into some of our services, portfolios, and more.